Hey guys, PJ back with another video here for Watch Trading Academy, and today we are going to talk about the worst event that has happened in Europe for quite some time. The tragic invasion of Ukraine by Russia. But we are not going to be talking about the political aspect or what specifically started the war here, but rather just discuss the impact that this is going to have on the luxury watch good markets in general across the globe, and how all of this ties together to give us either an opportunity to buy more assets or ultimately start running from them. So if you've been following any of my videos in the past, you already know my thoughts on where the watch markets are going as a whole, and how I did not really see a problem in how the watch markets were going to react to kind of the slowdown in economic growth we're going to have throughout this year. Now, you can also follow some of my other thoughts on the car markets that are directly correlated to this on my other channel at Exotic Car Hacks, to kind of understand the global impact of how cars and watches are all correlated, etc. But today we're going to talk specifically about the impacts of this war on the watch markets, and is it going to help, is it going to hurt, and what should you be doing to prepare for it. So let's talk for just a very brief moment about understanding the core of what has occurred. And there's a lot of media manipulation on what's happening. What could things like sanctions mean, and how are they going to take any impact on the banks or on luxury goods, and so on and so forth. So let's understand the gist of the financial part of this first. You see, after Russia made its moves, the United States and many of the European countries that were allied to NATO decided to push back against Russia, but through a very different way than just sending troops and fighting in the war, but rather by just crippling their economy. So how does another country cripple another country's economy? Well, there's quite a lot, especially if you are the United States, China, or all of Europe put together, right? Now, you could say that it would be very hard for maybe France by itself to cripple Russia's economy, but it wouldn't be so difficult for France with all of the other European countries and the US together to cripple Russia's economy. So you have to understand that when they sanction things such as telling basically the biggest banks that their SWIFTs will be removed, this creates a lot of problems for the banks, basically not allowing them to transact outside of their own country. This is a problem because we live in a global economy where we're not only getting fuel, we're not only getting oil, we're not only getting produce, etc. from other countries, but we're also importing and exporting massive amounts of different goods through these countries. And so there's both a logistical issue that, there's actual shipments that are going through a country, and then there's also the other side of it, which is what is coming to and from that country. The way globalization works is that some countries are not so good at making something, others are better and more efficient at it. While you can do something really well, someone else can do something else really well, and therefore you use your time to do what you do best and then trade assets in an exchange. So you both not only create revenue for yourselves and have a business there, but at the same time also give then to your country what it needs that you refuse to produce in-house. This is what the biggest argument was between the US and China conflicts that occurred over sanctions because of human rights violations, but also because of tax wars and tariff wars that the Trump administration started back then as it pertained to China, and then the US was forced to start looking at a lot of the things it was importing from there and considering what would it cost to build them here. And so, this created a huge problem at the time because of how globalization had basically intertwined these two major economies together and made it very hard to basically keep taxing each other up and up and up because they were so dependent on each other. So this is why if a war like this was to work out between the US and China, I can promise you that the diplomacy would be very different because there's a lot more to lose. Now, we all know that the Russians went over to the Chinese a couple of months ago. We saw this all over TV, that basically they had formed a new alliance, and I think they knew this was coming. And I think the Chinese also want to take Taiwan eventually, so they're looking at it and kind of seeing the world sentiment towards a country invading another and how that's going to play out. So the Chinese are sitting there watching. They're not sanctioning or hurting Russia, and that would truly hurt and stop Russia in its dead tracks, because I think Russia ahead of time knew that this would happen and what the consequences would be, and so it prepared for countering this by re-establishing its alliance with China. So that is how basically they were prepared for this. But with these sanctions, there's going to be a couple of things that have been happening in the news that we have to pay attention to. And one of them is right here with the Ukraine-Russia conflict and all of Russia's banks basically disappearing off of the SWIFT, but also the fact that they're going after certain key Russian players and preventing them from doing business or appearing in other European countries and hoping to end the war. But this isn't a war conversation. So the other thing we want to pay attention to in the news as it pertains to what we're going to talk about right now is specifically Canada. Canada is a much stronger and bigger issue here at stake to the conversation we're about to have about what happens to luxury goods. So what happened in Canada is you obviously saw the truck protesters, people that a small portion of the population that didn't want to get vaccinated, basically blocked all the roads with their trucks, creating supply chain issues when the world was already hit enough with COVID, creating further issues and slowing down the economy as a result of trying to get their voices heard and basically becoming anti-vaccine people. So as a result of trying to fix this, they started basically implementing their own version of martial law, freezing bank accounts, doing things like that, etc. And this caused a little bit of a problem, not because those people were trading watches, because I don't think a trucker is the number one guy that's trading a Patek, but rather because it started to bring a lot of doubt towards how much power government had over financial institutions. Now, we always know Canada is different than US, but you have to understand that this created a lot of fear in the markets, and a lot of people started to wonder, well, what if they choose to do this here? And what prevents them from freezing our accounts here or doing things like that if they don't agree with our choices? So what started occurring here is that there was a pattern of what started happening, and with the sanctions with Russian banks, this is something that is going to take a more globalized effect. And I don't believe there's a lot of watches coming from Russia, so I'm not really worried about Russia. It's not a capital of watches, so I don't think it's important. And the rest of the European Union isn't as impacted because life continues as normal. They're not getting involved in the war. So I think as far as the supply of watches currently, I think it's still going to continue coming through Europe. I don't think there's an issue now. Now, if the war expands and it becomes a NATO-based war, this could have serious implications on the watch supply chain. But this would even mean that pricing would rise even further up. So technically, this is not a good thing, but certainly if you're holding watches, not a bad thing either, in the sense that if it was to happen, it certainly is not going to become a greater issue, and you shouldn't liquidate your assets, etc. Now, let's talk briefly about what happened with the Canadian thing, because this plays a bigger role. So as banks disappear off the SWIFT, as government regulation shows that, again, its power over financial powers within the country, you start to realize that there is a big correlation here about the insecurity of banks. And this is a problem because I've gotten a lot of conversations from clients who have come to me and said, well, if this is happening in Canada, what prevents them from doing this here? And they're bringing up FDIC-based conversations where FDIC is not doing a very good job of reassuring people that it's okay, because at the end of the day, what even FDIC is doing is giving you 100 reasons why they could do this to you, and they wouldn't have to be held accountable to it. So it's creating a lot of fear in the markets that banks are not to be trusted. So we've seen this in the past. When banks aren't to be trusted, people seek alternative places to place money. And typically we know that gold has always sold to humans the idea of doomsday scenarios, and your money should be safer in gold than in the fiat currency. There's a lot of conspiracy theorists on the internet talking about how fiat currency is devalued and is eventually going to get switched over to digital currency, and this is the time they're using it to do that. They're hiding it behind the war. So there's a lot of these conversations that are just dangerous because it can create a lot of confusion based on your position in what you are. If you're heavy in Bitcoin, you have a heavy desire for people to abandon fiat currency and move to Bitcoin because they move your Bitcoin up and so on and so forth. So I think that's important. Now, I have a heavy position in watches. I like it when currencies obviously don't do that well because it helps watches up too, in the sense that people look at watches as well as an alternative asset investment, like a hard asset. So what's happening though, and what's going to happen, is the more people distrust banks, the more they're going to have to put their money somewhere. And there's only two main key hard assets that are often the target of individuals wanting to park money with high liquidity and high mobility, and those two things are watches and art in that order. So we know that watches have a high liquidity index. We know watches, the right watches, not all watches, can be great hedges to inflation and recession. So, watches are a counter to conventional financial institutions as it pertains to parking and storing money. And I think one of the greatest benefits we have here is to understand that we're in an area where more people have now accepted that watches are an investable asset. So this is huge, because you have to understand that we're in a place where basically the markets are already accepting this and going up, and now you have this new thing coming here pushing in and saying even trust more, right? So these two things are going to create a very interesting chain reaction. If the supply chain in Europe is not hit by this, and nothing changes and Russia just gives up its hopes of this bullshit that started, then what's going to happen is that supply chains won't be impacted, and the continued distrust in the banking and financial institutions will push prices up. If the supply chain is disrupted, then the pricing will go even further up than we've ever imagined possible. So the gamble here is it's either going up or it's going really up. So that's what you got to ask yourself. Now, there's been a lot of comments or questions about, well, the markets are showing weakness, people aren't buying, so pricing is coming down. And there is some truth to that. There are more deals to be had because there's always a portion of the population who gets overly afraid and kind of, I want to use the word, not straddled, but they get caught by surprise by things like this, and fear kicks in, and they stack a ton of cash in their house, right? So you have that guy out there, he owns a couple of watches, he's been liquidating. So there are watches that are going to be more so available or coming on the market because people are afraid to sell them. But you can still see jewelers paying very strong money on watches. This is a good indicator that, again, they're looking at the next 5 to 10 years, the next 12 months, and they're saying, hey, it's worth still paying up for stuff. So it takes you to the next level, which is where I'm trying to get to. There's distrust in the financial institution. There's a lot of hype about watches being an alternative investment as a hard asset. It's high mobility and high liquidity, and it offers and has data and track record from the people continuously trading it, the institutions doing that, saying they're parking their money into stuff, waiting for the next 2 years to happen in order to maximize the profits. So when we look at it that way, I'd say it's pretty incredible, pretty interesting, and it's looking very bright for the watch market. And I think it's pretty scary to say that, because we're already seeing prices at 300% of MSRP. We're already seeing certain watches basically disappeared off the map because everyone's stocking them till they turn into a double the cost asset. So I think what we have to understand here is that any type of conflict is either going to disrupt the chain of events, or it's going to create distrust in the markets. And when distrust creates in the market, then price goes up. And when chains are impacted, like supply chains are impacted, price goes up. So, both aspects here of the issue still rise and point us again to more, or should I say, inflated pricing going even further. So, I want to say that I hope that everyone stays safe in Ukraine, and I really hope they can fight off the stupidity of what's happening over there and take their country back from these morons. But otherwise, hope you've enjoyed this video. And of course, if you like content like this, please click a like. Leave me a comment. What do you think is going to happen? Do you think prices are going to plummet, go up? I'd love to hear your thoughts as to why. And of course, make sure you subscribe to the channel to see future updates on videos like this. I'll catch you guys next time on the next video.